and welcome to the Best in Fintech podcast. I'm your host, Daniel Dimitri, founder and CEO of Trellis and Savvy Insurance. I'm joined today by our guest, Angus McDonald, co-founder and CEO at CoverGenius. CoverGenius is one of the fastest growing insurtechs globally, including partnerships with top companies like Booking Holdings, which owns Priceline and Kayak, where I used to work, and Booking.com. So Angus, welcome to the show.
Thanks, Daniel.
So CoverGenius, most people aren't familiar with it. How do you describe it to someone you met on the street?
Well, CoverGenius is the insurtech for embedded protection. You know, we work with some of the world's largest digital companies to protect their global customers. And our vision is to protect them all. You know, every single customer that goes to our partners, we want to make sure they get the right protection product. Our global distribution platform, Xcover, enables this, right? So the digital companies we work with, they embed any line of insurance or warranty product directly into their booking platforms, their shopping carts, their registration forms. And so through a single API call, they can attach insurance or warranty products in those kind of digital platforms for their global customers. It means that there's just like all the regulatory burden, the logistical burden of offering insurance and warranties we take over, and it's an end-to-end solution. So they only need one partner, and they're able to launch consistently all around the world through us as a single partner. And we handle the claims, the licensing, payments, everything. Some of our partners, I mean, you mentioned the Booking Holdings guys, Priceline and Kayak and Booking.com, but, you know, we work with Intuit, we work with a whole bunch of airlines like Ryanair and Turkish Airlines. Some of the ticketing players like SeatGeek and Ticketmaster and Access, logistics and shipping as well. Decathlon Group is an example. In gig economy, Ola and other kind of players in there. So lots of different industries, but they all want to be able to embed insurance and warranties for their customers.
Why is that? Why do your partners want to? It probably takes a lot of time to build these programs with you and probably money. Why make that investment?
Well, it's actually driven by the end customer. What we see is that 70% of customers for all these platforms, we've done a whole bunch of different consumer surveys, and maybe, you know, in banking and finance, it's slightly higher that, you know, banks customers might want, are going to be more likely to want an embedded insurance offer than, say, a ticketing platform or a travel platform. But they are all around 70%, like 175 and 165. So what we see is consumers are looking for convenience, but they're also looking for the fit for purpose product. So the product that's exactly right for that transaction. You know, it's traditional insurers, it's confusing to know that you're getting the right product. You don't really know. You've got to read a big, long policy wording. For the everyday consumer to have a recommendation that's kind of targeted based on what they're doing, that's what's driving this whole trend. And certainly being able to use the transaction level data about what a customer is actually buying and then creating that fit for purpose product, we're seeing it's consumer-led demand.
Awesome. So 70% of consumers surveyed indicate an interest in insurance and say, this would be useful for me if I could buy it at the point of sale when I'm buying the thing I need protection of. A big investment going out, cover it. How much money do they put where their mouth is? I mean, I'm sure the attach rates are not 70%, or, you know, you have like a golden crown as well on this call. What is the reality on the grounds? It's certainly big enough to raise a Series D. So, but what is the success rate on attaching insurance?
Yeah, look, I mean, that's a great question, and it does depend on I would say it does depend on a number of factors. And I'm happy to talk through them, to be honest, because if you think about attach rate, it's kind of dependent on that platform and whether they've earned the right for the consumer to see the value in what they're providing, right? So, when we look at some of the travel businesses we work with, they have attach rates over 50%. So it's quite close to that 70% number. And that's because of a whole range of things. It's really targeted. People have just spent a whole lot of money on their trip or whatever, and they're kind of looking for the protection program. And it's the right time and the right place, and the presentation is really very clearly messaged. And it's like, yeah, I'm going to add that on. We see others in the travel spaces where that doesn't happen, where it's like, they're just buying one ticket perhaps, and, it's not part of a whole trip. So maybe it's just one part of the trip. And they're like, I don't really need my travel insurance yet. I'm going to hold off until I booked everything, and then I'm going to buy it. And so they have lower attach rates. So it's really about getting that presentation to the customer right, getting the moment right. And yeah, you can get attach rates up around 70%. In some of the other sectors, we have, they're almost like mandatory. Like one of our partners is Rhino, who does renters insurance with us. We run their renters insurance program. And what we see with that one is that when you move into an apartment in the US, that you need renters insurance. You can't actually move in unless you have it. So because of that compliance push, or just the need to have it, that means that you get higher attach rates in those kind of environments as well. So there's a few different things that drive the attach rates. But yeah, like certainly we work really closely with our partners to help them get that communication layer right. We're not just a platform that leaves our API open for anyone to be able to try and plug in. We actually believe that the consumer journey and creating seamless customer experiences is what's really important here. And to do that, it's a collaboration between both our partners and us to deliver that end customer experience.
It's already tomorrow in Australia, where you're dialing in from. And I think that's true on many levels, because Cover Genius not only was, I think, the first significant embedded insurance company, but probably one of the very first significant embedded financial services companies broadly. And that's becoming an extremely popular trend. I think Affirm and the buy now, pay later revolution is another angle of that growth. One of the questions that I have and I advise other companies that are doing everything, like I've seen embedded tax companies, there's embedded electricity, utility bill optimization. Every financial service you can imagine that doesn't even exist is being embedded these days. The hard part with embedding services is that everything is distributed through partners. I've had venture capital investors tell us and pass on the round saying this embedded thing scares us because you can't control your distribution. I'm curious what it looks like tomorrow from the lens of a Series D company that's, how long have you been around?
Well, look,
8 years?
we've been around nearly 9 years. So
9 years.
Yeah.
Great. So from this perspective of having been through the thick and the thin of embedding, only partner-based distribution, I assume, have you been only doing partner-based distribution for 8-9 years, or is it more recent? Yeah. So how do you qualify partners, and how much skin in the game do you make them put in up front when you're trying to sell them on this new business unit? Then obviously there's going to be some amount of success, performance-based pricing. And this also fits into the trend of usage-based pricing and PLG and product-led growth of aligning your economic interests with your partners. What have you discovered is the best way for any of these embedded financial services companies to meet partners in a way that respects the huge amount of investment you have to make into the partnership up front, and that they are going to have to make in the partnership up front, but that also has enough skin in the game that you don't get left at the altar?
I'm not saying we got it right all the time, but one thing we have learned out of this is that, it does need to be both that. It's a true partnership. We use the term partnership. We don't call out partnership team the sales team or something like that. They're not pushing a particular experience. They're actually a partnership team, and it goes back to what I was saying before about co-creating that customer experience. We're big believers in starting everything from the customer. And that goes across everything we do. I mean, if you think about it, we've got all sorts of different insurance policies, warranty policies. That's kind of in the back end of what we do. We always start with the customer. If you can work out what product the customer needs because of what they're fearful of or what data you've got from that transaction, then the rest of the solution can be built from that. So when we start looking for partners, and this I would imagine would be across all sorts of embedded, fintech, as you were saying, you need to find partners who have a vision for what they want from their end customer, and then you need to be able to create with them that vision, and they're the most successful partners that we have. What we do find, of course, is if you do innovate and you do create one good experience with particularly, one of the large enterprise partners we have, they're almost like category killers in their space anyway, right? So if you do it well for Amazon, or you do it well for Booking.com, or you do it well with, one of the airlines, all the other airlines and all the other e-commerce players look at Amazon and go, I want to do what they do. So it does have a benefit to start with the bigger guys. But having said that, we work with some of the buy now, pay later players. We've embedded different solutions with Zip Money, who's, you would say, is a mid-tier buy now, pay later player. They're certainly not like they're not as large as a firm or Klarna at this point. They're growing rapidly, but they have a great culture of innovation. And so for us, they were a great partner to work with. We believe they're going to do amazingly well in the future. And so we were able to build a solution that we think is great for that particular industry with them. So that's an example of finding a partner who's looking to innovate, who has a growth mindset as well, and who we can work with and collaborate with to build what we think is a market-leading solution for that sector. And then you can kind of go out and distribute similar kind of solutions to others. Everyone's got their own nuance, right? Like their views of what they want for their end customer can be quite different, even in the similar industries. So we don't believe in one size fits all. We're very much into collaboration and co-creating.
As you imagine advising embedded financial services companies at large, would you generally encourage founders and business development teams to go find or to cultivate that appetite for innovation and extension into insurance or into their category?
I'm a big believer in persistence. The team who I've worked with for a long time knows that we've lost partnership deals with some of our partners. Particularly at the start when you're a small company and it's, there's a bit of fear that, will they be able to deliver and these sorts of things. I'm just a massive believer in persistence. You check in and you'd be surprised these things come back to you. And we've certainly won business, 6 months, 12 months after we lost it.
Right.
And, the one they chose or the incumbent has just, done something annoying or hasn't been able to deliver, and then we get an opportunity. So I think you've got to cultivate that, and you've got to play the long game with these things. And I think sometimes that is hard for VC industry to really understand. B2B is different to B2C. I believe what we do is a lot stickier. We don't lose partners, and that's really our distribution, right? So if you're not losing your distribution at all, then you end up in a position where you're just continually adding on top of that. And I think that creates a much more sustainable business than one that's purely marketing driven or hype driven. But that's, of course, my opinion.
How similar is Cover Genius to what you initially envisioned when you started it? And what have you learned along the way that really steered the course a different direction, if anything? Or is it just a straight line from what you initially expected?
So when we started, we always wanted to be, we realized the problem was a global problem. And so, Chris, my co-founder, and I are ex-Google and Yahoo guys. We'd always worked in global business. And so we wanted to have a global business. And so we started that from the start. So I think that's no different to what we envisaged. I think how it shifts is, our go-to-market was very deliberate. We probably felt that we could expand into other, like maybe we could do some direct-to-consumer sort of stuff as well, what we worked out was having our strategy being B2B was really important. And if we stayed focused on that, then we could point the business in that one strategic direction. And that's made it easier as we've grown, because we know that, hey, what have we got to do? We've got to sign new distribution partners. And then people will say, oh, why don't you sell your technology to insurers or something like that, and help them? And I'm like, that's a completely different strategy. It's a great business. Someone else can go and do that. But we're really focused on the customers of our distribution platform partners and making sure they're getting an embedded protection product that's fit for purpose. And then the full claims and customer service experience is absolutely fit for purpose as well. So we're focused on that, and that's our problem. And I think that was a learning. When we started, I thought, oh, maybe we'll be able to do that, and then we'll be able to do that. But actually staying really true to your strategy. And then I guess doing more verticals, like that's one thing.
Yeah. And geographies.
And we've ended up with, enterprise sales teams all around the world. That's meant we're solving, different problems, language problems, like all sorts of those kind of things. But the embedded protection angle is actually what's pure. So I think parts of your strategy have to stay pure.
Mm-hmm. There's very few companies that operate insurance businesses on such a global level as Cover Genius operates. Does it work the same everywhere? Is it actually the same thing everywhere, or is it totally different? Do you have a view on whose system works the best?
Look, everywhere's got a different regulatory framework. That's what makes what we do administratively heavy, and it makes it complicated for our partners to try and set up this kind of infrastructure itself. So there is a benefit in having a platform like ours, which does take that burden away from you. That's great because we're solving a problem. But what it did mean for us is realistically the first 3 or 4 years was setting up that financial services infrastructure around the world. Being licensed in the European markets is possible. It just takes time. 50 US states. You've got all the provinces in Canada, Western markets like Australia, New Zealand, South Africa, Singapore, Japan. Like they've all got the regulatory systems there. You just need to go and set it up and do the right things by the regulators, and you'll get licensed. So it's possible. It's just a heavy lift to get going, and you tend to do it with global partners. So, because we do work with the big global players like Amazon and Booking.com, that meant we could justify going off and really pursuing that. And we had a very clear view that being global was going to be important for us in the future.
What's your view on brands? Do you want consumers to know your brands? Do you want them to think of this as Booking or totally their brands? How do your partners feel about brands? Is it a piece of anxiety or of controversial adversarialness, or is it easy because you're like, I don't care, or is it the other way, like they want you to have the brand so that you deal with the customer service? How does that work with brand?
What we've kind of worked out is we needed to have a toolkit for our partners, because some partners are going to only want their brand. They're only going to want their brand shown to customers. They're going to be comfortable with that. They're going to invest in it. They realize that means they're going to get more inbound into their own call centers and customer service experience. They want to then even parlay that before it gets to us, as a fulfillment. And so that's one kind of level, one point on the spectrum, if you like. The other level of the spectrum is another partner we have who's like, I don't want to have anything to do with this. I want your brand everywhere. I want them calling you if there's a problem. If there's a claim, they're clearly not having, they've got a problem and I don't want to have anything to do with it. So that's the spectrum, and there's people in the middle. So what we do is we provide a flexible toolkit to be able to help our partners to make those decisions. And it's something that they change as well, we can embed the claims experience inside our partners' apps or digital platforms. And that means that, you get a seamless customer experience because a customer can go and make a claim on one of our partners' websites, as an example. But what it also means is that they're more likely to associate the claim experience with that partner. And so we tend to work really closely about tracking NPS scores, making sure the delivery of the claim and customer service experience is absolutely top notch. And I think by doing that, everyone kind of is joined up. So I don't really have
there's not a single answer. It depends.
Yeah, we're happy to support our partners with either of those strategies. However, I would say that the ones who embed it more get the higher NPS scores. Because
when you ask for an NPS score, whose brand do you use and what question do you ask? Do you say, would you book another hotel on booking.com? Or do you say, how did you feel about your claims experience with Xcover, booking.com's insurance partner?
Yeah, it's more the latter. So we do post-claim NPS scores. That's kind of what we track.
Yeah.
I think a lot of insurers tend to do NPS scores on the sale or something, or on a customer service kind of experience,
right,
where you called our call center and what was your experience because they answered a question about your policy. That's not, we don't think that's as valuable as post-claim, because that's where the rubber hits the road, so to speak, around, is the policy actually fit for purpose for what that customer was trying to do.
So you started off with travel insurance? Was that the first vertical? And then the second vertical was warranties, product warranty?
Yeah.
And rental car was sort of somewhere in the middle, or?
Yeah, look, I mean, we actually started off doing rental car insurance years and years ago. It's kind of grew into travel, live event ticketing. Parcel insurance was pretty early for us too, then going into e-commerce, into warranties, then into sort of fintech and prop tech sort of areas around renters insurance, home, standard sort of property type insurances.
Yep.
And now we're seeing sort of things even into the life area of, income protection sort of products and other sort of life type products that can be embedded. I think we're less kind of worried about the insurance product or the warranty product, and more we really try and stay focused on the transaction that we're embedding in. What's the data in that transaction we can use? Because ideally it's a seamless experience, right? So ideally we can quote and then we can bind a policy based on the data that we get, so the customer doesn't have to do a second step. They don't have to type in another 6 different form values to get the product. So do
you have any products that are underwritten post-quote where there's like a rate estimate and then a little bit more and then a little bit more and then the underwriting's finalized, or is it always bindable rate bound?
Yeah. At the moment, Nice. It's bindable rate and bound.
Great.
We're exploring whether we do the post-sale piece, but it goes back to that whole being pure thing. It's kind of just different at that point.
Yeah. What are the verticals or the transaction types you're most excited to expand into over the next couple of years?
So, look, I mean, the verticals that we're excited about are, I guess, verticalized software plays, right? So if you think about over the last sort of 5-10 years, there's been so many verticalized software players start to dominate the different industries. And rather than call them out, because whoever I say, I won't mention someone, but
there's more omission than there is inclusion in any list, but yeah. So verticalized software players, so whether that's ones who really deal with restaurants or ones that do gyms, or
any of those kind of verticals, we think that's a really exciting area, and it's an area where a lot of them have had the strategy. If you look at their strategy decks, they will say, oh yeah, insurance is something we should be offering our clients or our partners. But most of them haven't actually launched anything in that space. They've done the embedded finance part, to your earlier point, but insurance has probably been a bit of a laggard. So we're really excited about those kind of players. anywhere where there's those kind of rich data sets, we think are going to be
and
going to be in a
pixels.
really great
They can paint pixels for the consumer and introduce the subject.
Yeah, exactly.
Yeah. But does that create also a B2B to B, like a B2B to, it's like a many B's in the middle, because there's the verticalized software player, and then there's their business that they're supporting, like their gym or their restaurant, and then that entity also has to be on board with the program, right?
Yeah, it's more B to B to B. Yeah.
Have you launched any partnerships that look intermediated like that, or is that going to be a new challenge coming up?
A bit like that. I mean, some of our ticketing ones are a bit like that, if you can imagine. Even like, Intuit. So yeah. There's a few where there's an extra B in there.
Great.
Which tends to be small to medium sized businesses generally.
Let's talk a little bit about working at Coverage Genius. Where can someone live and join? I guess anywhere in the world, or is Mars or Antarctica available? Or
pretty much. I mean, we have offices in all the major areas. So San Francisco, New York, London, Amsterdam, Sydney, Singapore. So offices pretty much everywhere. I think we've got 10 offices. And then we have a lot of remote teams as well. So, people can work most places.
Great. So the next question is, what differentiates someone who's working at Coverage Genius from someone who's not? Like, what is your ethos? What is the cultural distinguishing factor? Everyone says, well, there's integrity as a value, but what really sets apart someone and the culture of Coverage Genius from Google or other places you've worked?
Look, I think it's kind of a hard thing to answer, other than to say, we have cultural values that we recruit against. One of our values that we had right at the beginning was make it better. And by make it better, we mean, is this person likely to fix something that's not necessarily broken at this point, but it needs improving? Is someone got a mindset where they're trying to improve things? And so make it better has been something that we do have a whole series of interview questions that we kind of target whether we think people have that kind of value entrenched in how they operate. Things like succeeding together is another value of ours. We use that as a way of trying to describe collaboration and things like that, and making sure that everyone experiences the success. It's not someone trying to operate in a silo and away from everyone else. The other areas of flexible mindsets, things like that. So someone who, our belief is that to be an innovator, you need to be flexible. You can't think that the way things have been done in the past is the only way to do things. So they're just three examples of the kind of things that we do look for when we're trying to attract talent to the business, and they tend to be the kind of things that we know that if people have them, if they have those attributes, that they're going to do really well here.
Awesome. All right. So as we come to a close, if people want to drink more of the Angus Kool-Aid, where should they follow you, and who do you follow? What books have you read that really inspired you, or people have you worked with, or publications do you read that is your input and motivation and inspiration?
Oh, it's a great question. Look, the books I tend to read are ones that I just like reading. So I'm not really one who reads a lot of self-help books and things like that. But I will say that I do listen to speakers and podcasts and things. And one of the speakers we had recently at one of our partnership team events was Mark Matthews. And Mark is a big wave surfer. He does some of the things that I am just so fearful of, like those huge waves off Portugal at Nazaré, or, some of these crazy kind of waves in Tahiti and these sorts of places. And he surfed them all. And, but he talks about being really fearful when he was a a teenager about big waves. He was, and so what I really like about what Mark talks about is how you overcome fears. I spoke about being persistent before, but it's kind of connected to that. How do you overcome your fears? How do you become someone who you want to be, and not let fear get in the way of that? So, Mark Matthews, have a look at some of his stuff on YouTube and things, and he's come back from incredible injuries and all this sort of stuff. Makes what I do look particularly easy in comparison.
He sounds very inspirational for someone who sells insurance and to people who are doing higher risk things that, that they need protection from.
I'm not sure.
Every time you sell a policy, you're like, I have Mark Matthews in mind. That guy, he's very talented, but everyone needs insurance. All right. Well, thanks for coming on the show, Angus.